businesses which can only be transacted, at the general meetings, which can only be transacted at the general meetings. So remember, you say that there are those things which the members of the company can only, or there are those businesses which can only be transacted, which can only be conducted during the AGM of or during general meetings of members, e.g., appointment of the auditor. Number 2 is electing the directors, and so on. So these are those particular businesses which can only be transacted at the general meetings of the members, Number 3, we said that these particular meetings are also convened by the company to do what? To enable members to do what? Equally to transact businesses which can only be transacted during the class meetings. Remember, in this case, we said that a class meeting basically is a general meeting which has been convened by the company, and that meeting is supposed to be held by the shareholders who hold a certain class of shares. For example, a general meeting of the ordinary shareholders only, or a general meeting of the preference shareholders only. We said that there are those businesses which can only be transacted during such meetings, e.g. what? E.g. variation of class rights. Remember, in this case, we said that when talk about variation of class right, this whereby the right which is entitled to, or which a certain category of shareholders are entitled to, is basically to be varied or is to be changed. Like the preference shareholders may be entitled to receive something like 15% dividends every year, but the directors are proposing to reduce that maybe to 10% or to 12%. That is a good example of variation of class rates. That can only be discussed by the preference shareholders in a meeting which is basically called the class meeting. And finally, we said that these particular meetings here are convened basically to give the members an opportunity to discuss issues relating to the management of the company affairs. To do what? To give members an opportunity to do what? To discuss issues relating to management of company company affairs, and also resolve any existing dispute. If there is a kind of a dispute which exists between the directors and the shareholders, that dispute can only be solved during this particular meeting. So therefore, those are some of the importances of these meetings which are convened by companies from time to time, which are saying are meetings of who? Are meetings of members. Yes, so that is it. That what is required in question 8A. So let's move to question 8B. And the question here was asking about the duties and the powers of the chairman. The duties and powers of the chairman. In relation to the general meetings. In relation to the general meetings. Now, remember in this case, what we said, when we were looking on this particular topic of meetings, we say that anytime the company has convened a general meeting, we say that for that meeting to be deemed to be valid and any resolution passed in that meeting also to be regarded to be valid. So that meeting should have a number of prerequisites. And number 1, we said the meeting must have a quorum. Number 2, we said the meeting has to be convened through a proper notice. And number 3, we said The meeting has to be convened through the proper authority. The meeting has to be chaired by who? Has to be presided over by the chairman. So those are the prerequisites, the requirements of a valid meeting. So any meeting which is convened by the company has to be presided over by the chairman. So what are the duties? What are the powers of the chairman in relation to those meetings which are convened by the company? Or what is the chairman supposed to do in relation to these meetings? What are the powers of the chairman in relation to those to this meeting? So I think maybe we can which the of the company can only, or there are those businesses which can only be transacted, which can only be conducted during the AGM of or during general meetings of members, e.g., appointment of the auditor. Number 2 is electing the directors, and so on. So these are those particular businesses which can only be transacted at the general meetings of the members, Number 3, we said that these particular meetings are also convened by the company to do what? To enable members to do what? Equally to transact businesses which can only be transacted during the class meetings. Remember, in this case, we said that a class meeting basically is a general meeting which has been convened by the company, and that meeting is supposed to be held by the shareholders who hold a certain class of shares. For example, a general meeting of the ordinary shareholders only, or a general meeting of the preference shareholders only. We said that there are those businesses which can only be transacted during such meetings, e.g. what? E.g. variation of class rights. Remember, in this case, we said that when talk about variation of class right, this whereby the right which is entitled to, or which a certain category of shareholders are entitled to, is basically to be varied or is to be changed. Like the preference shareholders may be entitled to receive something like 15% dividends every year, but the directors are proposing to reduce that maybe to 10% or to 12%. That is a good example of variation of class rates. That can only be discussed by the preference shareholders in a meeting which is basically called the class meeting. And finally, we said that these particular meetings here are convened basically to give the members an opportunity to discuss issues relating to the management of the company affairs. To do what? To give members an opportunity to do what? To discuss any existing dispute. If there is a kind of a dispute which exists between the directors and the shareholders, that dispute can only be solved during this particular meeting. So therefore, those are some of the importances of these meetings which are convened by companies from time to time, which are meetings of who? Are meetings of members. Yes, so that is it. That what is required in question 8A. So let's move to question 8B. And the question here was asking about the duties and the powers of the chairman. The duties and powers of the chairman. In relation to the general meetings. In relation to the general meetings. Now, remember in this case, what we said, when we were looking on this particular topic of meetings, we say that anytime the company has convened a general meeting, we say that for that meeting to be deemed to be valid and any resolution passed in that meeting also to be regarded to be valid. So that meeting should have a number of prerequisites. And number 1, we said through the proper authority, the meeting has to be chaired by who? Has to be presided over by the chairman. So those are the prerequisites, the requirements of the chairman in relation to the meetings, in relation to the general meetings, which are convened by who? By the company. Number 1 is said the chairman take into account he is the person who is the presiding officer. So he must inform himself about what? About the agendas of the meeting. So for you to be able to chair any meeting, you must be having enough information about the agendas which are to be discussed. So therefore, even before the meeting, the day of the meeting, you must take some time as the chairman you go through those particular agendas and ensure you have enough information about those particular agenda. There is no way you can be able to moderate a discussion and you're not having enough information about whatever is being discussed by the members. So number one, we said, is to inform himself about what? About the agenda of the meeting. So he must ensure that he has enough information about those agendas, which will be discussed by the members in in this meeting. Number two, we say the chairman has a responsibility to ensure that even before the meeting starts, there is a quorum. There is what? A quorum. Remember, he said quorum is the minimum number of members who must be present in a meeting for the meeting to be deemed to be duly constituted. We said a quorum. This is something which is clearly stated in the company's articles of association. Though we said if there is no provision in the company's articles of association talking about the quorum, then we said according to the Companies Act, the minimum number of members who must be present are two. And what? Are two. So the other duty of the chairman is basically to ensure the minutes are kept. So what are the minutes? Minutes basically said are the official records of the proceedings and also resolutions passed by the members in a general meeting. So it is the responsibility to ensure that there is a person. If the company does not have a company secretary, the chairman must ensure that there is a person who is taking the minutes of those particular meetings. Also, we say the chairman has a responsibility to do what? To sign those minutes once prepared, to sign the minutes, to sign what? The minutes. And maybe finally we can also talk about to conduct voting. To conduct what? To conduct voting. So these are basically the various powers, not powers rather, the duties of the chairman, the duties of the chairman. Then we can look on the powers. What are the powers of the chairman? What are the powers of the chairman in relation to these meetings? Number one is basically to do what? To determine who to speak, to determine who to speak. So it is the chairman to decide. If, for example, you have a number of members who are studying, they want to give their contributions on various issues which are being discussed, it is the chairman to determine who will speak and for how long, and maybe after that, who will then proceed and speak after that member. So the other power of the chairman is basically to vote in case of a tie. In case of what? Of a tie. Remember, in this case, we say this whereby those members who support a certain resolution, those who are opposing it, are the same. So who is supposed to break that tie? It is basically the chairman by voting. So that is basically the other power of the chairman. So the other one is basically the power to declare voting, to declare the results of the voting. So if the voting has been done, who is supposed to announce the results? That power is vested on the chairman. That power is vested on who? On the chairman. So the other power of the chairman is basically to call the meeting to order. To call the meeting to order. If, for example, the meeting has become disorderly, everybody is speaking. So it is upon the chairman to call the meeting to order. Order everyone to sit down so that the meeting can proceed in an orderly manner. So that the meeting can proceed in an orderly manner. So also the chairman here has the power to do what? To adjourn the meeting. To adjourn the meeting. To adjourn the meeting basically is to discontinue the meeting. If, for example, there is no quorum within the appointed time, so he has the power to call off that meeting simply because there is no quorum. Simply because there is no quorum. So these are basically some of the powers and duties of the chairman as far as the meetings of the company are are concerned. As far as the meetings of the company are concerned. So then we look on the last question here. That is part C. And the question reads here, it's about, is this carried from the topic of from the topic of directors. From the topic of directors, and basically the question reads that, okay. Yes. So the question is, it is legal for the company to give a loan to a director, or basically a director of the holding company, or extend a guarantee or provide a security in connection to a loan. So in that case, you're required to summarize the exceptions to the above. So in other terms, what you're required to do here is we explain the exceptions to that rule. So in other terms, we are required to explain the instances or the circumstances whereby the company can give a loan to a director, because we said it's basically legal for the company to give a loan to one of its director, or even a director of a holding company, or even the company to act as a guarantor, or the company to do what? To provide a security which is given to a director. But we talked about various exceptions as far as that is concerned. One, we talked about a private company. Number one, you can say if the company is a private what? The private company. So basically, we say that this restriction does not extend to private companies. It only applies to public companies. Public companies are the ones which are prohibited from giving loans to their directors, but private companies can be able to do that. Number two, we said where the director is a holding company. The director is a holding company. What does that mean? The director is a holding company. It basically means that the director is the majority shareholder. He holds more than 50% of by that company, so he can be given a loan or even a guarantee, or the company acts as a guarantor. So number three is where the ordinary business of the company ends of that a company entails raising of money. Number four of that a company entails raising of money. Number four, we can say that where the loan is given for the benefit of the company, where the loan is given for the benefit of the company. Benefit of who? Of the company. When we talk about the loan being given for the benefit of the company, it basically means that here the director has been given that loan for the benefit of the company. For example, in this case, we said if the director maybe want to go back to like college and pursue a certain course, then we say that the company can give a loan to that director, can extend a loan to that director so that he can be able to go back to college and basically pursue that course so that he can be able to provide better services to who? Better services to the company. Provide better services to who? To the company. And finally, we say this where maybe we can talk just 5 points here, though we also have others, where the details of the loan have been disclosed to the members, and the members have given the approval, and members have given the approval. And the members have given their what? The approval. So because we said anytime or before the company can actually proceed and give a loan to a director, the company has to disclose that. Has to disclose the details of the loan, the amount of the loan to be given to the director, and give the approval. So therefore, these are basically some of the instances, some of the circumstances whereby the company can give a loan to who? The company can give a loan to a director. Yes. And actually that is it. That what is required in relation to that question number 7, and also question number 8, that is, and also on Saturday we will do more revision. But continue reading, continue revising on what you have already done. We continue from there next week as we wind up with our revision. Remember now, from next week, or actually from now, you only have 1 week to do your do your exams. So therefore, you need to work very hard. You need to go through what we have what we done, the topic we covered, and also try to peruse through those particular past papers. Ensure that at least once you go through any paper, you can be able to answer at least 70% of the questions. You may not necessarily be in a position to answer all questions, but ensure that you answer at least 70% of those particular questions from those particular past papers. So we stop at that point for now. You have a nice afternoon. We continue from there next week on Friday. Companies for the year which ended 31st of March 2017. So we have the statement of comprehensive income, basically for 3 companies, W, S, and also F Limited. So we have revenue, cost of sales, gross profit, other incomes, dividends received, operating expenses, the finance cost, the profit before tax, income tax expense, profit after tax, other comprehensive income, which include gain on property devaluation, total comprehensive income. Then we have the retained earnings at the start, and also the equity share capital also at the start of the year. So we have some additional information, number 1, all the way to note number 7. So what are we required to do here? We're required to compute the gain or loss on the disposal of shares in S Limited on 31st of March 2017, and basically a mandated statement of comprehensive income for the same year. That is the year which ended 31st of March 2017. So automatically, the first thing we need to do here is we come up with a group structure, and also we need to know the date when the parent company sold shares which were held in S, because I hope you can see, as per the requirement, we're required to compute the gain or loss on disposal of S Limited. So the parent company sold shares in S Limited. So where do we have information about the group structure? Let's go to note number 1, and you're told W Limited bought 60% holding in the equity shares of S Limited on 1st of April 2016. So W Limited here acquired, in other terms, it bought 60% of the equity shares in the company which is called S Limited on the 1st of April 2016. 1st of April 2016. And then you're told the purchase consideration was agreed at 900 million, of which 600 million was to be paid in cash. The balance was satisfied by immediate issue of 5% bond at par. And then you're told S Limited net asset had a fair value of 1,400 million as at 1st of April 2016, represented by equity share capital of 775 million, retained earnings of 625 million. It was decided to apply the proportion of net asset method in to calculate the goodwill on acquisition. So no impairment loss on goodwill arose during the year. So that when computing the goodwill on acquisition here, we are told we are going to use the proportion of net asset method. So if that is the case, which method are we going to use in computation of goodwill? The full goodwill method or the partial goodwill method? We are told to use the proportion of net asset method. Yes, in this case, we are going to use what we refer as the partial goodwill method. Partial goodwill method. Remember, I say that in an examination setup, the examiner will not tell you specifically which method to use, but you can be told that on the date of acquisition, the NCI, for example, is measured at fair value. In that case, we said just use the full goodwill method. So you can also be told that the NCI will be measured at the proportionate share over fair value of net assets. So if you're given that information, for example, that is what you're told in our questions here, then you use which method? The partial goodwill method. Remember, you said the partial goodwill method, we only compute the goodwill of the parent company. The goodwill of the parent company. Now, equally, we are told that goodwill was not impaired. We will come back to that. Then let's move to point number 2. And you're told W Limited sold its entire 60% equity holding in S on 31st of March 2017 for shillings 1150 million. So before we go to that point, I want us to get information about the date where the other company was acquired, because I hope you can see we have how many companies here? We have 3 companies, W, S, and F. So we also need to get the information about the date when the other company was acquired. When the other company was acquired, and someone is saying Modimo's video is not clear. Modimo's video is not clear. Was it like that? Okay. Okay. Yes, I'm getting some message on my screen that my internet is not stable. So sometimes the internet tends to fluctuate, and that automatically affects the quality of the video. Here is that before we consider the information about the disposal of interest in note number 2, we need to get information when the parent company acquired the other company, because you can see we have 3 companies. We have W, S, and also we have F. So where do we have information about the acquisition of F? So we have that information in note number 3. And basically note number 3, we are told that W Limited owned 90% of the equity shares of F since its incorporation. No goodwill which arose on the acquisition of W owned 90%. Okay. No goodwill which arose on the acquisition of on the date of acquisition. There were no retained earnings in existence at the acquisition date. So basically, we are told this company here acquired 90% of the equity shares in the company which is called F Limited since this company was incorporated. Actually, we are not given the specific date of payment there. And then you are told there was no goodwill which occurred on the acquisition. And equally, this company didn't have any retained earnings, simply because at the date it was acquired, it was basically a new company. So basically what that means is that this will be the parent company there, that equally is a subsidiary, that is also a subsidiary. And then if you go to the requirement, first of all, before you go back to note number 2, if you go back to the requirement, you'll basically be able to see that specifically in Roman 2, we are required to prepare the consolidated financial statement for the year which ended 31st of March 2017. Remember, this is the date of consolidation. So when did our financial year started? So automatically the next year we start 1st of April. So this year started 1st of April 2016. That is when the year started. And therefore you can see this company here, that is S, was acquired exactly at the start of the year. So having that information, but automatically this company was not acquired during the current year. It was acquired some time back at the date it was incorporated. Sasa, yes. Let's go back to the information we have in note number 2, because in that note we are given information about what? We are given information about the disposal of interest, or basically disposal of shares, disposal of shares in this company, which is called S Limited. Now we are told in note number 2, W Limited sold its entire 60% of the equity shareholding in S Limited on 31st of March 2017 for shillings 1150 in cash. No entry has been made to reflect this transaction. Now, what is important to note here is that this company here, that is W, we are told it sold the entire shareholding. So entire shareholding means that this company here sold all the shares held in this. So basically, this therefore is basically a full disposal. Is a full what? Disposal. Now, if it is a full disposal, then record what we said. This one should be accounted for in accordance with what? In accordance with IFRS 5. What does IFRS 5 state? IFRS 5 requires that when this company is preparing, the parent company is preparing the group accounts, the parent company should classify the operation of the group into two. The discontinued operations, and then the continuing operations. Now, this subsidiary which has been fully disposed, we said it is actually known as discontinued operation. Discontinued what? Operation. Whereas now the parent and basically the subsidiary here shall be regarded to be the continuing operation. So therefore, when preparing the consolidated statement of a profit or loss, we said first of all we have to determine the profit or loss for the year from the continuing operations. From the continuing what? Operations. Continuing operations, basically what we will do, we will take the revenue of W plus that of F. We will not include that of S because it is a discontinued operation. And then we take the expenses, those of W and those of F. And then from there, what we will do down here, we will get the profit or loss from still continuing operations. From continuing what? Operations. Then from there, we come down here and we show the results from the discontinued operations. Discontinued operation is basically the subsidiary which was fully disposed. What do we consider here? We consider two items. One, we will determine the gain or basically the loss of disposal in the normal way. Is basically a result from discontinued operation. And then, because this one you can see as per note number 2, I hope in note number 2 you can see the date of disposal. It was disposed exactly at the end of the year. So the parent company had 60% shareholding in S for the whole year. So what we will do, we will compute the profit or loss of this subsidiary here. Basically, that one will be computed by taking its revenue for the whole year minus expenses for the whole year. Minus expenses for the whole year. If we get a positive figure is a profit, if we get a negative figure is a loss. The same case here, we will have a gain which is a positive, and a loss is what? Is a negative. And then from there, we will basically get now the profit for the profit for this group for the whole year. But basically, what is important here is that when preparing this consolidated statement of profit or loss, simply because this subsidiary has been fully disposed, it is regarded as a discontinued operation, and therefore, when preparing this, we need to prepare that in compliance with IFRS 5. Don't combine the results of the parent and those of F with this one. So, because these are continuing operations, these are discontinued operations. The profit or loss from discontinued here. I think there is a question for cash flow, which is there in the past papers, and I think we were able to look on that question and take into account the parent company had fully disposed one of the subsidiary. This is how the income statement was presented in compliance with IFRS 5. Sasa, yes. So that is basically what is important as far as that is concerned. So coming back here, we are told that post at the end of the year. Remember, you said the year started 1st of April 2016. So this when the subsidiary was acquired, and actually this is the date of disposal. The date of what? The date of disposal. It was disposed exactly at the end of what? At the end of the year. So remember, we say that anytime the parent company sells shares in a subsidiary, and basically the parent company loses control, we have to compute the what? We have to compute the profit or the gain or loss on disposal. And I think that is what you required in Roman 1. Let's first of all, we go straight to that. Then we will go through the additional information as we make the necessary adjustments. So we compute the gain or the loss on disposal of our shares in what? In S Limited on 31st of March 2017 or 31st of March 2017. So we just need to recall how we compute this. This is something we did in our previous class. Something we did in our previous class, how to compute the gain, or basically the loss on disposal, the gain or the loss on disposal. The gain or the loss on disposal. So how do we compute this? Remember, in this case, we should have one column here, just a single column, and our figures are given in million of shillings. So here we start with the fair value of our purchase consideration, which was received. Always this one will be provided by the examiner. The fair value of the investment retained, which was retained. In this question here, do we have any investment which was retained? Is there a full disposal? Elizabeth, do we have any investment which was retained? No investment which was retained, because it is a full disposal. It's a full what? Disposal. No investment which was retained. And then to this we less the parent company, and also we less the fair value, net assets at date of disposal. At date of what? At date of disposal. At the date of disposal. The date of disposal. I think we can start by determining this one. The parent company unimpaired goodwill. Where do we get information about that? We will compute the goodwill on acquisition of S from the information we have in note number 1. Note number 1. Let's go back to note number 1, and basically we compute the goodwill on acquisition of S Limited. So, and remember, as per note number 1, this goodwill, the method, that basically what you have said. Goodwill, we start with the